Hi there, Chris Weston here from Pepperstone. Sorry, getting a bit distracted. Yeah, sorry, we're just going through the charts that matter today. It's a massive week ahead in going across financial markets. So I thought we'd just bring us together today to have a look at all the various factors that are going through the market. So we're going to have a look at the charts that matter. We're going to go through the landmines that we need to be aware of and how to navigate those situations, fairly efficiently. And look at expectations, positioning, market rates, and also the kind of implied volatility that's in this market at the moment. Before I do, let's go to the disclaimer for compliance purposes. Okay, off that fairly shaky start, apologies. I think it's a good time now to go into let's set the platform for the week ahead. We've seen markets looking to prepare for what is a massive week ahead. We've got 14 different central banks meeting. We're going to have to navigate those situations. I think probably the big one, if we can take it out, is the moves that we saw last week in the commodity complex. We've seen breakouts coming through in high grade copper. We've seen that in WTI crude. In fact, what I'm going to do is I'm just going to bring up the chart straight away that we've been seeing in on TradingView. So we can see in spot crude, you can see this, that we're actually trading in this nice sort of bullish channel that's been taking place. I think for the scalpers, we might push up into $83. There might be a level there just to fade markets looking for a quick scalp. They're coming through, but you can see that we've broken through this horizontal resistance levels in WTI crude around 79.84. And it looks like it might start trending. You can see that price is now holding above that 5-day exponential moving average, and it's making higher highs. So it's a bit of a grind at the moment. You're not getting that big impulsive move like you're seeing in copper. Copper, what we've seen there is a lot of the Chinese smelters are talking about cutting back on production. On there, we've seen copper prices moving up pretty emphatically. That was up about 6.1% for the week. So some good flow playing for in copper. This is not really a demand story. We are seeing some Chinese data coming through. We'll have a look at that in a second. In terms of fixed asset investment and industrial production and retail sales numbers, they've just been coming through on the wires at the moment as I speak. But you can see that this is really about supply story that's been playing through. If you want to stay in the commodity story, I think probably the one that's really going a huge momentum trade is what we're seeing in cocoa at the moment. Cocoa was up 8.4% on Friday, whereas up 26% on the week. We are looking at supply issues that are taking place on the west coast of Africa, the Ivory Coast. There's a lot of stories that you can find on Bloomberg and other factors as well. But this is an incredible move that we've been seeing really throughout the year. So this has doubled. You can see big range expansion. Market's just been holding this 5-day exponential moving average. You can see massive rate of change. So obviously for momentum traders, those who like buying high and selling higher, buying pullbacks into the cocoa price, I think, at the moment is still very much in play. I'd imagine there's been a few people looking to fade this move at the moment, but I think this is one that's obviously had a big move, and is showing real fundamental signs as to what's been going on in terms of the cutback on supply. If we have a look at the equity story, we focus on this column here. You can see this is priced in their own domestic currency. So obviously European markets priced in euro. You really want to be buying equity markets in the weakest currency. That's where you're going to get the effectively double bubble. But you can see that the Spanish market, the best performing market in euro terms, and if you price everything into US dollar terms to get apples and apples, we can see the IBEX was up 2.5%. So that was probably your best performing market. We've also seen good gains coming through in the Hang Seng. That had a good gain last week. We can have a look at that in a second, because I think the Hang Seng is starting to become quite interesting in itself. You can see S&P, the cash markets in the US were fairly a bit mixed, to be honest. We can have a look at the internals on those markets there, but you can see a little bit lower. All is not lost in those markets, but we are starting to see a bit of rotation and a little bit of a grind lower. In terms of the last 5 days, in terms of FX markets, well, the Chilean peso, it has been the superstar currency there. You can see if we go into the FX market, this has really been a copper play more than anything else. Their big terms of trade in Chile is copper, and obviously that move up we've been seeing in copper price. If you want to trade copper, you can obviously look at it in multiple facets. You can trade obviously the underlying, or you can also look at trading, through FX markets as well, although the spreads on CLP are a little bit wider. But you can see that we've had this nice move lower as the Chilean peso has been outperforming in line with what we've been seeing in that copper price there as well. But we're starting to seeing a few buyers stepping back in on Friday. So the question is will people look to use this to sell into? I'm taking a slightly positive view on the US dollar as we go into what is going to be a massive weekend of risk. But you can see on the downside that we are seeing good sellers playing through in the Japanese yen. That's a surprise, and I think that might be the wrong trade being short this week. I know it's expensive to be short the Japanese yen, to be long the yen, sorry. But as we go through the week, we are watching the yen very closely. But last week, over the last 5 days, dollar yen is down about up 1.6%. You can see a bit of weakness playing through in the Kiwi dollar, and that's something that we are watching very closely as well. You can see euro dollar having a fairly tight closing range playing through. So you can see set the scene over the last 5 days. What I like to do is find a way where we're buying strong currencies, we're selling weak currencies. I think that's typically how I like to view things on a very simplistic basis. So that's where we are in terms of markets. Commodity prices have been working very well indeed, mostly on the supply issues more than the actual sort of demand story that we all focus on. We are seeing life coming back into the Japanese market as we go into what is a very, very important Bank of Japan meeting tomorrow. And we're looking at the US dollar, which is starting to grind a little bit higher, and we'll chart that in a second. But let's go into the event risks that matter, because it is really a huge week, as I keep saying. We have 14 different central bank meetings. We've got a Fed meeting on Thursday at 5 a.m. Eastern Daylight Time. We have a Bank of Japan meeting. We've got a Swiss National Bank meeting. We have an RBA, Bank of England, Colombian Central Bank, Banxico meeting in Mexico. They are meeting as well. So I think there's about 6 different G10 central banks, and then obviously a handful of EM banks that we can talk about as well. But let's have a look at what's expected, because what we need to do, obviously, as traders is understand the risks around these. Do we want to be holding positions over these central bank meetings, or do we want to look to massage and reduce exposures, because it could be a volatility event where the risks are two-way? I know you read a lot of textbooks, you speak to a lot of people, they do say don't hold position or don't trade over news. I agree. Well, that really depends on the strategy that you employ personally. I think there are people who do trade news very successfully when they look at the risks and the skew. And what we do is we look at positioning, we look at optionality, we look at trend going into the market. And we also look at market pricing around rates. I think that's really, really important. So what I'm going to do now is I'm going to bring up market pricing to give us a sense of kind of where we are. And I've pulled this data from Bloomberg, so you can see for the meeting this week on the Fed, there's really nothing being priced in. So the market is not expecting any kind of rate cuts to come through at this meeting. Where the door is open, as you see, June, we've got about a 65% chance. We have 16 basis points of cuts being priced into US swaps. That gives us about a 65% chance for that meeting that we get a rate cut. Now, at the end of the year, we are pricing 73 basis points of cut, which equates to about 325 basis point cuts by that time. Now, that's where we reconcile the statement, the guidance, everything we hear from the economic projections, and we marry it or reconcile it relative to that market pricing. And that's where you're going to get gyrations in equities in the US dollar and, of course, rate markets as well. In Australia, we can see the next central bank meeting is on Tuesday, tomorrow. We've got about 1 in 5 chance of a, or 1 in 4 chance, or 1 in 5 chance of a rate cut. Obviously, I don't think there's going to be any chance that they're going to cut rates at this meeting. But we have to look really down to the sort of August, September window when the market is pricing the first point of easing coming through there. You can see by the end of the year, we've got 37 basis points of cuts being priced. So about 1.5 rate cuts being priced into Aussie rates futures there. In the UK now, of course, we've got a Bank of England meeting coming through on the 21st. There's, again, nothing being priced in there. So they're clearly, the market's not expecting them to do anything. This is a kind of holding patient meeting. But you can see that the market is implying that we probably open from around June. There's about a 50-50 chance there. The first full rate cut is being priced for August. And by the end of the year, we've got 59 basis points, or just over 2 rate cuts being priced into UK swaps markets. In Europe, we're not really seeing huge amounts of data. We've got some PMI numbers coming out later this week, which we can talk about. But you can see rates pricing here, market sort of central weighted distribution of pricing is, we're seeing a first rate cut on the 6th of June. We've got about 83% chance there. And by December, we've got 91 basis points, or nearly 4 rate cuts being priced in. We can also focus on Switzerland. Actually, let's just go and have a look at some of this data. So this week, in terms of the data flow for us to navigate, really, it's just all about the Fed, which we can touch on right now. So that's been going to come out at 5 o'clock And then we're going to have Jay Powell's press conference half an hour later. Now, the most important thing there, if you are looking at what to focus on for this situation, I think, in terms of against that market pricing, which we just talked about there, the statement and the overall tone should be largely unchanged from previous commentaries that we've been seeing. I know we saw a pretty strong CPI number that's 2 months in a row now, and also PPI numbers. And we look to the 29th of this month, where we're going to see the core PCE numbers. And that sort of run rate on a month-on-month basis is probably somewhere around 25, 30 basis points, which, is there and thereabouts. But I think this is the number. And I think whilst you're looking at the tone and the statement, I don't think we're going to see too much change. What I think is really, really important above everything else is this so-called dot plot projection. Now, they do this on a quarterly basis, of course, and that is where we're going to get these new economic projections coming through. And you can see here from the last meeting in December, they were coming out with the sort of central thesis, or the medium projection, is that we were going to see the Fed funds rate at the end of the year at 4.6%. That implies, from where we are at the moment, 3 rate cuts as a central case for the markets. Now, the algos immediately are going to tone on this. When we get our new economic projections at 5 a.m., the question is will that be revised up from 4.6% by 25 basis points? Now, to do that, we need 2 of the 19 voting members to raise their dots to say we're going to get less rate cuts coming through. And that if there's just 2 members change their view, then the medium dot will increase as well. Now, if we were to see that happening, if we were to see this move up to 4.875%, you will see, in my opinion, a big spike up in bond yields, and the US dollar will rally pretty sharply. Equity markets may go under a bit of pressure. We may even see more than 2. Now, I think if you look at consensus from sell-side economists, it is that that this rate should stay unchanged at 4.6%, implying 3 rate cuts for the remainder of the year. But if we were to see those 2 dots, I think the algos, the news recognizing outcomes, would react straight away. And that's the big risk. I think this is the most important thing ahead. And if you're looking at running dollar positions, gold positions, equity positions over that's really this idea about the central dot being changed. Now, what we could also see, conversely, on a playbook scenario, is if this dot was to remain at 4.6%, we could see some relief. Now, I also look at the projections that we've got at the moment from the Fed, and you can see that real GDP is projected to be, well, the last count was at 1.4% for the year. I think there's a good chance that number could be revised up to 1.6, maybe even to 1.8%. We may see some tweaks to inflation, but it won't be by much. So in theory, if we were to see this number being taken up to 4.875%, implying 2 rate cuts, what you're likely to see is de-risking coming through, the markets coming lower. Conversely, the other scenario is that we get this stays at 4.6%, we get an upgrade to GDP, and we see a relief rally. We see new all-time highs coming through in the S&P and the NASDAQ, and also the US dollar coming under a bit of pressure. So I think that's a really, really important scenario. They're the 2 sort of playbooks that I'm looking at very, very closely indeed. Let's have a look at Japan, because I think this has to be on the radar now. Tomorrow, if we go through here, it's really, the national CPI numbers would in all theory, be something that we really need to look at. But it's really this number here that comes out on the 19th tomorrow. Now, there is no set time, as you can see, but it should be between sort of 1 p.m. to 4 p.m. Eastern Daylight Time. Now, if we have a look at the expectations from the market in terms of economists, you can see that the sort of central main case is that we see rates continuing to be at negative 10 basis points. So they're not going to move away from negative interest rates at this meeting. Or at least that's the sort of sell-side consensus. Now, after what we saw on Friday with the Rengo wage negotiations coming out at 5.33%, that was hotter than what we saw last year, and certainly hotter than sell-side economists. I think this number is probably a little bit incorrect. And I think over the weekend we've seen a number of more sources talking about the idea that they're going to start to move away from negative interest rates sooner. So it's actually my personal base case that they will raise rates by 10 basis points, which is kind of, obviously out of consensus. And in fact, we've got 2 banks here, BNP Paribas and Capital Economics, who are expecting a 20 basis point rise in actually take them into positive in positive nominal rates. Which I think would cause big gyrations coming through in the Japanese yen. I think that was clearly not being priced. Now, if we have a look at the JGB market in itself, we have had a decent sell-off playing through. You can see that in January, we're trading around 0 basis points. We got up into sort of 20 basis points around that figure. So maybe an element of market expectations moving in. We do see that the Japanese swaps market is pricing in around about about 6 or 7 basis points. So there's about a 60% chance that the Bank of Japan raised by 10 basis points. Remember, they do raise them in 10 basis point increments at this stage, relative to what we usually see with most central banks who are raising increments of 25 basis points. But you can see there's been a decent sell-off of late. So expectations are rising. But yeah, I think if we were to see this idea of a 20 basis point hike, I think that would cause probably some buying in the Japanese banks, the Topics banks, but I think the Japanese yen would go for a bit of a rally. Obviously, if we were to see with Japanese swaps pricing in 6 or 7 basis points or so, if we were to see rates being on hold, then you might see a little bit of weakness playing through in the Japanese yen, although it's really a question in Japan of when rather than if they start to normalise policy. And so I think that's an interesting one as well. So again, another big default situation where the algos will certainly look at this zero interest rate policy, whether we get a rate hike or whether we don't, above everything else. I know there's a lot of conjecture about whether or not they move away. They change the pace of asset purchases, both on ETFs and also Japanese government bonds. But I think if we have a look at that, I think the market is going to be most focused and react initially and straight away, whether in yen positions or JPM 225 positions, straight into that. The other one which you need to put on your radar is what's happening in Switzerland. On the 21st, which is on Thursday, we are going to be seeing the Swiss National Bank coming out. Now, the consensus at the moment is that we see rates being kept at 1.75%. Now, 2 weeks ago, we had a view that this was pretty much a done deal, that we were going to get a 25 basis point cut. Some people some banks were even saying we could get a 50 basis point cut, but now you can see that it's largely consensus that we're going to see rates on hold. And that's probably down to the idea that the ECB have been pushing back a little bit. And whilst the Swiss National Bank do want to ease policy before the Swiss National Bank to keep some downside momentum playing through on the Swiss franc, the fact that the ECB are sort of trying to guide the market post June, takes away the idea that they need to look to cut too early relative to the ECB. Plus, the recent CPI numbers were a little bit hotter than expected. But you can see that there are some. What have we got? We've got 3 economists out of 21 who are calling for a 25 basis point cut. The swaps market is pricing about a 30% chance of a 25 basis point cut. I actually think this should be higher. I think it probably should be around sort of 40, 45%, maybe even 50%. Maybe I think the market is underpricing the risk that we do get a 25 basis point cut, which obviously has big implications for the Swiss franc as well. One other you need to have on your radar, everyone needs to have this one on the radar, is what's happening in Nvidia. Now, Nvidia, as goes the market. As of tonight, Jensen Huang will be speaking at the the GPT conference in America, and this is a really, really well watched conference that takes place. And Nvidia, both the CEO and some of the data science leaders, will be getting together talking about the future of generative AI. They'll be talking about their sales proposition, their sales opportunity, how this is all shaping up, how the business is tracking. And it's a strong innovation conference. And I know that if you have a look at the options market at the moment, they are implying about 11% move by the end of the week in Nvidia's share price. And you can see that we are consolidating. Yeah, the market's really not wanting to push this one around. You can see we've got this triangle pattern playing through, which needs to reconcile it. And of course, as you go into this GTC conference, you can see why people have sort of restrained. But it needs to break one of these two ways. Now, if it breaks through this low around 841, I think we could probably go back and maybe head back into this area, which needs this gap that needs to be filled, and maybe it sort of takes a while. Typically, these GTC conferences are positive affairs for Nvidia, and you can see then we'll probably be taking and trading to new highs on the back of that if we do get a break to the upside here. But this one needs monitoring. So this is an event that if we do see big volatility, which the market is expecting, it will have big ramifications onto the other semis and also into the NASDAQ as well going forward. So I think that definitely needs to be on the radar coming forward. So they're your big move. We do have the RBA meeting as well. No, we're not expecting anything now. We talked about the rates pricing, very little being priced there. We've got a Bank of England meeting playing through. And again, not really much expecting. It's a bit of a holding pattern. The rates market's not pricing anything from that one. If we have a look at the pound, at the moment, You can see it has been a little bit heavy. Now, we've seen a few buyers stepping in today after a bit of a reversal, playing down into the 120, 127 handle. It still needs to sort of gravitate back up into the 5-day exponential moving average, which I'd expect, a few sellers to take place. We are moving in a sort of bearish channel at the moment, and I think selling rallies in the pound in cable still makes sense at the moment. I still see risks that we head back down into this sort of 126 handle, into this pivot here, and perhaps even to the bottom end of the range. And I think if we're going into the new week, this idea that if we do see these medium dots being pushed up, you don't want to be too short US dollars in that situation. So I think we're going to see people massaging those US dollar shorts going into that meeting. And I think one of the interesting things, if we were to see 2-year yields here, you can see a break of the sort of 475 on the 2-year yield, which obviously encapsulates the sort of the short-term rate expectations. I think that will be a big US dollar positive. So we're watching, can we break through these levels of 475 on the 2-year as we see yields moving up, certainly relative to German bunds and also UK gilts. That should put some upside potential into the US dollar, and I think people will look to massage those positions going into the Fed meeting there as well. So we are making this series of lower highs. We look like we're sort of just trying to break that one down. Dollar yen, we can see has been sort of got down into sort of the 146 levels. We've seen some short covering. We're back into this former distribution range. The question is, can we move a little bit lower, a little bit higher back into the sort of mid-range in the short term there as well? So I thought it's a good idea. So we are charting the markets. I think one of the trades that I think could be a really good one from a tactical perspective is the idea of short Swiss franc against the Japanese yen. And the reason is we've had a bit of a move up here, but I think the market is underpricing the risk that we do get a 25 basis point cut from the Swiss National Bank. As we said, there's about a 1 in 3 chance being priced that happens. I think it should be higher, and I think at the moment the market is the sell side economists are too pessimistic. I think there's a really good chance that the Bank of Japan are going to look to ease to hike policy by 10 basis points. Whether they go 20, I think is yet to be seen. But I think from a mixture of the Swiss potentially under a rate cut and also the Bank of Japan looking to raise rates this week, I think there's probably some downside coming through from a tactical perspective. Now, for your trading momentum, that's not a trade that you'd look to take on, but I think from a tactical perspective, that does make some sense for me at the moment. We have a look at Bank of Japan, dollar yen, as I say. Will a 10 basis point hike actually move the deal? The market's obviously saying they're not too concerned about that at the moment. Obviously, if we were to see a 10 basis point hike, they're going to make it pretty clear that they're not going on a hiking cycle. They're just moving away from negative interest rate policy, and I think the market's fairly comfortable with that one at the moment. Obviously, we see 20 basis points. That could change that situation playing through. Let's have a look at the equity story. One I like at the moment, I think should be on the radar, is what's happening in the Hang Seng. We are in this bearish channel that's playing through. You can see we're just in this rising trend, this wedge pattern at the moment. I think the way you play that is if it breaks the downside, obviously we could go along for the ride. But I think it's difficult to short the Hang Seng at the moment because of what's happening. We've got earnings coming through this week. We've got Tencent coming out of earnings midweek on the 20th. And if we were to break this to the top side, then I think, and we had certainly a break of the down channel, then I think people will look to chase this market. If we have a look at flows taking place in China at the moment, you can see that this is money going from the mainland into Hong Kong equity funds at the moment, and you can see that there's been big inflows. You can see the 5-day average of inflows have been running pretty hot. So money is making its way into Hong Kong, into the equity markets there, and the mixture of that with earnings could see this market break a little bit higher. That said, I think this is one which needs monitoring. Let the market come to me. If it breaks higher, I think the ability to chase this one could see a nice bull trend taking place after really what we continue to work nicely in this what is really a regression channel with 3 standard deviations either side. If we have a look at the US 500, we've just broken out this channel. It's not particularly ominous at this stage at the moment. We've had this bullish channel. We're just breaking to the downside there. I think if we get a break of 50.97, these kind of lows, it might get a higher volatility. We might come down to fill the gap into this sort of 5,000 level. Perhaps there's some scope over time to come down to that. We'll obviously have to see what happens with the dots. If we were to see the dots coming up and showing 2 rate cuts, we are going to see rate cuts coming out of the market, and I think the equity market will struggle on the back of what we've been seeing there as well. Have a look at the Japanese market. We are seeing buyers taking place as that yen is weakening off at the moment. It looks like it probably wants to go back and test this these recent highs playing through as well. If we have a look at the combination in US equity markets, going back to that point. Just to have a look at the sort of quality, what we've been seeing. Cyclicals have generally been outperforming defensives. High beta have started to underperform low volatility beneficiaries. Most short baskets are underperforming a little bit now, and momentum seems to sort of just be there and thereabouts. And that tells me that we're probably in a situation where the market is a little bit nervous to go into that situation through the week. So really, that's the focus of the week, and we'll cap it there. But actually, let's just bring up the commodity trade. I think we have to really have a look at what's going on in the commodity trade. Let's have a look at that chart of copper. Lovely move up into 410. I think this one continues to stay firm in the short term. I still like this one into these recent highs. 436 potential on that one. If we have a look at gold at the moment, and I think the interesting thing about gold is it's not down. I think if we get a break of these recent lows, you can see there's good buying support on the higher time frames around 2055. I think if that sort of rolls over, if we were to see real rates moving up a little bit because of those dots, I think that's really key. The US dollar breaking higher, then gold prices have some further downside. Clients still seem to think that we've got some downside playing through, but we're just now holding below that 5-day exponential moving average. I think if this cracks below these levels here on the high time frames, then there's going to be some good shorting opportunities as we go into that Fed meeting. Again, it really comes down to the 2-year Treasury. If it breaks through those recent highs I talked about, the dollar goes, then gold's got some downside in that situation. Crude prices, as we talked about, we've got scalping levels into sort of $83, but this is a nice grind higher that we've been seeing. I really like oats at the moment. Interim trading one there, you can see that we've been banging on the ceiling of 379 for quite some time. I think a break of that level there, should get some good momentum, and we could start seeing a bull trend playing through. But we've made these sort of structural higher lows playing through, and I think if we get a break of that, that could be a good trend trade that needs to be on the radar as well. And of course, cocoa's just been absolutely a monster trade for a lot of people, similar to what we've been seeing in the crypto space as well, where we've been seeing good buying playing through. Until recently, where we just sort of rolled over a little bit. Maybe this is a canary in the coal line, because this is just a risk asset, in my opinion. This is a high beta risk asset that's been in play, but we are supposed to roll over. Can it recoup and make a push back up? We'll have to see, but we're seeing some consolidation. Good buying into 6,500. I think that's 65,000. I think that's the line in the sand at the moment, where we can look at short opportunities on a bit of a move below. Again, it comes down to the Fed. So what are we seeing on the week? We've got the Fed meeting. It's all about the dots. We've got the Bank of Japan. Do they raise rates? Do they not? We could see some volatility in the yen. We've got the RBA. Bank of England's going to be a holding meeting. We've got Nvidia GTC conference, which is expecting some big moves. We talked about the pennant and the triangle pattern playing through. It could be a big week. There's a lot to look out for this week. Trade at Pepperstone.